Welcome to another weekly stock market update. In this weekly stock market update, I will show you the 5 stock market indicators you shouldn't ignore and what they are telling us right now. Week after week, the stock market has been making record high, and as it moves higher, fear and greed become more apparent in the stock market. We have those that fear the stock market might be too high and it is going to sell off. And there are those that are afraid too much money is left on the table, so they are piling it on and adding on to their existing position in hope to make more money as the stock market continues to move higher. So which camp are you in? Let me show you what the stock market is telling us, then you can decide whether you agree with the stock market or not, and are you leaning on the right side. Before I show you what the 5 stock market indicators are telling us, let's do a quick recap on what the stock market has done and what it might do in the near term. The stock market put in another strong week. The S&P 500 closed the week with another record high for the week. It has gained more than 52 points or 1.65% and closed the week at 3,221.22. Sound familiar? It should be, because we've been talking about the 3,200 level for quite a while, and the possibility of overshooting that target and hit this 100% major move around 3,220 level, which is the 100% major move of this consolidation balance area. On this long-term weekly chart, we can see the S&P 500 still marching higher toward the upper boundary of this megaphone channel, and the price is above the rising 10-week and the 40-week moving average. It has gained more than 2,550 points from the March 2009 low to the present, just a little bit under 380%. Looking at the daily chart of the S&P 500 year to date, it has gained 709 points, or a bit over 28%. Last Friday, the S&P 500 has hit the 100% major move target of 3,220.99. So where does it go from here? One, it could continue to move toward the next Fibonacci extension, which is up here at 3273, or it could continue to march toward this recent price channel and hit this price channel upper boundary. Not to ignore the potential downside, after all, the stock market doesn't go straight up. The near-term downside would be possibility of retracing back down to this 618 extension, where it sits somewhere around 3,147, and also confluence with the lower boundary of this price channel. Then for the longer term, if it failed to hold this 3147 area and get a bounce off of the lower price channel, then we could see it possibly retrace back down and test the prior pivot breakout near the 3,027.98. Now, with the backdrop of what the stock market might do in the near term, let's go see what the stock market 5 indicators are telling us. Let me remind you to help me break the YouTube algorithm and support my channel by smashing that thumbs up button and subscribe. Looking at the stock market sentiment, the VIX is still hovering just about the 12 level, sitting at 12.51. This tells us there is not much fears in the market. And looking at the put-call ratio, is sitting at 0.63. And what this means is for every 100 puts, there's a little bit more than 150 call. And that tells us that the market participants are still very bullish on the long side. And looking at the new high, new low versus the S&P 500, remember back here in November, we saw the S&P 500 was making new high while the new high, new low was making lower new high, new low. And that tells us that there is some negative divergence and possibility of a pullback. But then as the market continued, the S&P 500 continued to push to a new high. The new high, new low also came back up. And as you can see, right now it's pretty much back in sync. And looking at the advanced decline line versus the S&P 500, same with the similarly to the new high, new low. Back in November, we saw a advanced decline pretty much flat, while the S&P 500 was making a new high. And right now, the S&P 500 is making new high, along with the advanced decline also making new high. So that again is back in sync. And finally, looking at this chart here with all the major market indexes, last time the New York Composite did not make a new high, but right now it has made a new high along with the Dow Jones Industrial. So you can see that the New York Stock Exchange Composite made a new high last Friday, along with the Dow Jones Industrial, the S&P 500, the NASDAQ 100, and the NASDAQ Composite. The only two indexes that still have not made new high is the Dow Jones Transportation. You can see that it is still a little bit away from it, and also the Russell 2000. And the Russell 2000, it is making a climb toward that new high area. So well, just a matter of will it be able to get up there before the market pullback, or it will not be able to push up to that new high, and that remains to be seen. But the other concerning thing is also the Dow Jones Transportation, because the Dow Jones Transportation is still a distance away from its all-time high. So there you have it, the 5 indicator on what the market is telling us. It certainly is still pointing that the market has not made a top yet, because the market doesn't make a top when there are multiple major market indexes making new high. It is only when there is fewer and fewer major market indexes make new high, that's when we see the market start to top. If you like the content in this video, give it a thumbs up and help me smash that YouTube algorithm. Subscribe to my YouTube channel. Thank you for watching, and good luck on your trading, and happy holidays.